host, I'm Tina Hui with Follow Coin, and we are in New York at WeWork Labs, and we've got an excellent panel with incredible people. I'd love it if you guys could maybe perhaps go down the line and introduce yourselves.
Okay, well, my name is Paul Vigna. I'm a reporter at the Wall Street Journal, and I am the co-author with the gentleman on my right here of a book called The Age of Cryptocurrency.
And I'm Michael Casey, a senior columnist with the Wall Street Journal, colleague of Paul's, and I'm going to use the opportunity to say that word once again, co-author of The Age of Cryptocurrency, a new book about Bitcoin and digital money, and various other things.
I'm Will O'Brien, CEO and co-founder of BitGo. We're the leading Bitcoin security platform company, and we power some of the largest exchanges like Bitstamp and funds and OTC trading desks and businesses operating Bitcoin.
Hi, John Betts. I'm CEO of Noble Markets, and we're building an institutional exchange with some Wall Street firms.
My name is Brad Chun. I'm the co-founder and CEO of Tech Cafe. It's a retail consultancy. I'm also the president of Butterkiss Company, which is a private crypto consultancy working with clients around the world to help them implement blockchain technology.
Well, to begin the panel, I think it's interesting to discuss the age of cryptocurrency as a whole. If you guys could tell us what the backstory is of your book, and then we could discuss it.
Yeah, sure. The backstory is that I went to the Inside Bitcoin conference last July here in the city. And
2013 previously.
Right, 2013. I'm sorry, you're right. It mixed up the years. Right?
That's a fast book writing.
Yeah, no, it wasn't that fast. It wasn't that fast. Right, so it was the summer of 2013. I went to the conference. I had been writing about Bitcoin on and off for several months at that point, but wasn't really convinced that there was a big story there. And Mike had started writing about it too, a little later, but still. And at that conference, I really got a sense of really the energy and just the fact that for the first time I saw it as a movement. I saw that there was something really there. So I went back to the newsroom and I was writing up a story, and I was talking to one of the other reporters, and I was telling him about all this stuff. And he said, yeah, you know, sounds like something Michael Lewis would write a book about. And as soon as he said that, I thought, well, last thing I'm going to do is wait for Michael Lewis to write. Why am I waiting for Michael Lewis? So at that point, I realized that there really was probably a book here, that there was a big story to tell, and that I wanted to tell it. So eventually, Mike and I kind of put our heads together and figured out that we wanted to do this, and we pitched it, and got a book contract, wrote it very fast, because there's actually going to be a lot of Bitcoin books coming out.
Oh yeah, there's about, what, 15 at least.
Yeah.
Right. So I will say ours is the first out from a major publisher, so we're kind of proud of that. And we're proud about the book, too. I mean, we really tried to pull back and take a look at what this means, what cryptocurrencies mean philosophically, economically. We tried to dig into the history of it and really present a very full picture of it.
Yeah, it's actually funny because when Paul came to me the idea he wanted to write this book, I thought, well, that sounds like a good project. Yeah, I mean, let me introduce you to my agent. So this agent that's helped me with a couple of other books that I've written, and she's great. We went out for a drink. A few more wines later, I started realizing how big this topic was and what the broad implications of it are, and how exciting it was. And we just really got digging deep into that conversation. And then at the end of it, my agent Jillian said, "You're both writing this." And so we got an order from her, and that was it. But it really is. That was what we've enjoyed about it is the sheer, depth of the topic and the breadth of the topic, in the sense that it really has far-reaching implications. I think that's what we're trying to do here, is to show the man on the street that this is not just this quirky little digital currency that might try to somehow usurp the dollar or something, but that there's this profound technology behind it that has far-reaching implications, and that's really the intent for it.
Interesting, very insightful feedback. We can't wait to read it, obviously. But then I'm actually curious also, what does the age of cryptocurrency mean to each one of the rest of our panelists?
Yeah, well, I think it's, we are now seeing the awareness of Bitcoin is at now an all-time high, the adoption is at an all-time high, it's accelerating. We're seeing adoption by large institutions, large funds. We're seeing so many different use cases pop up, and that it has really crossed that chasm where it will, in my opinion, I think Bitcoin will become as ubiquitous and as important as the internet has become to us. And so Bitcoin, cryptocurrency, so forth, there's really the genie's out of the bottle, there's no turning back. So I think I don't know if Michael and Paul, this is an origin story or kind of, because I haven't had a chance to read it yet, but I think it's a really important moment in time to understand where this came from. It's not just Satoshi Nakamoto, but it's the ecosystem that built this, and so I think that's an exciting piece to write about.
You know, it's interesting. We were looking in sort of our business planning, some of the decks, and we put in there the Gartner hype cycle. And at TNABC in Miami, we were here this weekend when Dan Murray from Terra did his presentation. He had the same diagram in there as well. And I certainly think that, you know, we're either at or coming through the trough of disillusionment, and now it's about, you know, getting sort of practical adoption and pragmatic rates that's coming on there. I think that this has ironically been healthy, not just for someone in the exchange business who we like volumes, but I think that it's several layers to where it's kind of shaking up the ecosystem and the holdings of coin. And I think that as Will said, there's a lot more sort of serious money from an investment perspective coming in. But I think some of the practical use cases, you know, we need sort of a lot more naturals in the ecosystem. Right? There are miners of early adopters who held long, where people can speculate and trade. The payments processes have been good about encouraging the adoption of the use cases there, but I think certainly if you're looking at the payments remittance use cases that companies are putting together in there, how do we create natural transaction bonds and usage for Bitcoin? Even when you think of where they're building with IBM the Internet of Things, where they have these devices are paying for themselves, so they're tolls in the highway and using Bitcoin as their currency in there. I think those kinds of things are going to change the market structure and the balance.
Did you say you're happy with the price fall? Did I hear that?
I was happy with the volume.
Well, I think, you know, I guess we all get to buy it for those of us who believe in it. But more importantly, for Bitcoin, right, when, you know, remember when it was going up in 2013, right? And Bitcoin was going 500, and so I quickly got there and said, gotta get in this, gotta buy, and then by the time you buy it, 700, oh, you know, it's going up, you want to do this, and it's like 1100, and it's like, oh, it's too expensive, right? And part of it is, we still have the mentality as a society, and we think about sort of broader adoption, buying shares, right? And you want to buy one share of Berkshire Hathaway A, it's $236,000. Don't have $236,000, you can't get it. Bitcoin at 1100, people psychologically think one Bitcoin, I have to buy one Bitcoin or two Bitcoin. They don't think I can buy $50 of Bitcoin. And to get the man on the street until we kind of get the understanding, I think it's helpful for the price to be lower to get more people encouraged and feel that they can get a starting point in there. So yes, I do think it's good. I think it's good for the industry as a whole on several levels. You know, people make money, lose money, but I think, you know, great if we didn't have the massive swings. But I think now that things are getting more serious, we saw the NYSE Coinbase announcement this week, get people more confident in Bitcoin, and oh, it's affordable. When we come in, I'm willing to take that chance. I think it's good for us.
Well, from my perspective, I think the volatility and price swings are probably the single largest barrier to having mass adoption. And if you try to use Bitcoin right now as a consumer or a retail business or somebody that's not geeking out about the technology and how cool it is, it's just such a big barrier to adopt it. And when I talk to retail businesses all the time about, you know, do you want to use this? Maybe you should keep balance up. Like, why would I want to keep any kind of balance in Bitcoin at this point? If you look at the price volatility, it doesn't make sense for our business, right? But in terms of actually looking at the technology itself, and I think we're all, you know, really bought into it, and I'm a technologist too, and just looking at the blockchain technology itself, you know, I'm right there with Will. You know, I think this has been, you know, creation of the blockchain technology is probably the single most disruptive technology since the creation and invention of the internet. And what the internet did for, you know, communications and making the world a smaller place, I think Bitcoin blockchain technology is going to do the same thing for the financial world. So I think it's very, very exciting. You know, some people describe the financial central banking market as the last major monopoly in the world. And if you can disrupt that, but provide value to citizens and global citizens, we're talking about a global economy, that is a very, very powerful mechanism. So there's a lot of incumbents that, you know, NYSE signing with Coinbase, it's really good that they're also recognizing the fact that there's this technology and they also want to embrace it too. But there is sort of a perceived notion of us versus them, and until you can get that we're all in the same team kind of thing, that's going to be very interesting for us to see. I think 2015 we'll see a lot of that.
Well, can anyone here see everybody getting on the same team and seeing, you know, galvanizing Bitcoin forward, everybody kind of uniting?
I think it's probably, actually, it's probably not going to come immediately, but it's probably going to come sooner than I think people might surmise. you talk about, it's funny, you talk about the history of Nakamoto, and when we first started writing the book, the initial idea was we were going to open on October 31st, 2008, Nakamoto releases the white paper, and we're going to go into that whole thing. And as we were writing the book, our focus was changing because the story was changing. And I think if we wrote the book a year later, or a year from now, it would probably change more. As we were writing more about the story, and we were seeing, like you were saying, the bigger implications of it, the focus completely changed, and the focus of the book now really is more about what Bitcoin can do and what cryptocurrencies represent, what the technology is, what you guys are talking about. And that's something that I don't think a lot of people get yet. I mean, people are still trying to, I mean, look, we're reporters, we write about the price all the time. People are still trying to get their head around just the price, what that means.
Right.
And, you know, I'm interested in getting your opinion on what the price means, because I don't think Bitcoin's found a fair value yet.
Yeah.
I think that market, and especially, you know, that market is still developing. It's still it's almost a rudimentary kind of a marketplace. These tools are just coming out. But I think Bitcoin is still trying to find a fair price.
Yeah, I agree. I mean, well, I personally think Bitcoin is dramatically undervalued, but we don't know the path Bitcoin will take. Bitcoin is blockchain technology, crypto is so pervasive, it could literally impact every financial use case in the world. So in part of the world, it could be a store of value versus fiat currency. Another part of the world, it could be remittance. Another part of the world could be payment method. You know, we sit in America and we have our Apple Pay to buy Starbucks, and we're fine with that. We don't need to pay with Bitcoin. What's the point, right? But 65% of the world is unbanked, doesn't have access to credit, and so blockchain technology, crypto can actually facilitate that. So I visualize that there's going to be this fabric of all these different use cases that suddenly kind of weave together, and crypto hits that switch and becomes so important that maybe in 50 years it's a global reserve currency. You know, and that when you hit that point, then you're talking about $1 trillion asset class or multi-trillion-dollar asset class.
How important, though, I mean, it's a question for everybody, for the fulfillment of its potential, is the idea of the general public buy-in? I mean, does mum and pop really need to be, you know, in favour of Bitcoin, or would it be that the NICE is a player behind the scenes? Are we looking at a back-end solution to Bitcoin that ultimately then seeps its way into public consciousness, or do we actually have to have the public on board to achieve all this potential?
I think there's two parts to the answer of that. And as I was saying earlier, in Bitcoin about creating natural use cases, right? When my first business was an internet service provider over 20 years ago, and kind of going through this, and we didn't go around explaining TCP/IP. Right? And you know, today we talk about web, and if I tell people I started an ISP 20 years ago, they go, "What's that?" Right? Like the AT&T data plan. Thing that powers Facebook that you use.
A nice AOL dial-up modem that we all employ.
And so I think that as people, and certainly this year we're starting to create, businesses are starting to create use cases that ride on Bitcoin, that people understand, they get the value proposition of that use case. I think that's going to drive underneath the natural volume and adoption of Bitcoin to be on there. And I guess the other part then is, I guess for a time I get to turn the tables on you, the question, is, you know, what is it going to take to get the media to kind of create stories and move from something that's a nice salacious headline, right, that gets world attention, to something like, wow, this is actually something good, and how do we get that?
Well, we're never going to move away from salacious. Understand that right now.
Bread and butter.
Bread and butter.
Leads. I will tell you that. I will tell you that. Bit of a private. There will be an excerpt/essay in WSJ Review that we, of course, have written that I think is going to try desperately to get away from that. It points out that there's these headlines that everybody's focused on, but you know what? Put that aside for a moment and think about this technology. This technology is a breakthrough. And so, look, there's a lot of us who get it, there's a lot who don't, and ultimately,
just like the general public.
Just like the general public. I think the media reflects it. It really does. You know, it drives news, and so you know we're part of that process. It's a negotiation. It's a dialogue, whatever you want to call it. I think,
objectivity.
You know, yeah, I mean, ultimately, journalism is multiple voices with multiple views coming together and sort of consensus forming around that. I think the consensus still is that this is some crazy idea, and we're obviously not part of that. So whatever voices we add to that has some impact, and we'll see how it evolves. I just think inevitably, because in the same way that I always love that Brian Gumbel clip that people show about the internet. What is this?
Oh, yeah, that's a great one.
The internet thing. So I think of that, and I think, you know, that's maybe where we're at, and ultimately it just becomes, as you say, John, just something that's maybe in the background, these use cases that people feel comfortable with, and they don't worry about whether it's TCP/IP or whether it's blockchain or whatever that is.
Nick at the Bitcoin Center on Monday at the meetup, he was saying, how many of you get emails from all your friends every time something bad happens to Bitcoin? When the price goes down? And then everyone has their hands up. And how many do you get from your friends when something good happens? Nothing. Right? And I think that, as part of that, we've had some interesting announcements from certainly St. Louis Fed. And there are people out there, I think, that are coming from the traditional finance and regulatory environment and governments that getting their stories out, but these are very, very educated people. Obviously, their role is to control and help manage and build the financial ecosystem. And it surprises me that their endorsement doesn't sort of ring louder in terms of what's going on and getting that messaging and say that, look, it's here. Yes, we're going through adoption curves and cycles, but it's not like Wall Street is coming up or the government's coming up. They're already there. It's just really for everyone else to catch up and realize that.
I think we're in a phase of development of the ecosystem now that also doesn't connect to the price, because the price is really, one of my investors joked that Bitcoin is possible groundbreaking technology for the third world. In the first world, people are speculating that might happen, right? And so you've got this kind of bifurcation effect. But what's happened in Silicon Valley, in New York, in LA, and other parts of the world is investors are coming in and saying, let's build the core infrastructure. Let's start to build the security infrastructure. Let's start to build the exchange infrastructure. The days of Bitcoin past, the Mt. Goxes, the Magic the Gathering online exchanges, and so forth, those are gone, right? And now we have something like $400 million of venture capital poured in a few years. We have hundreds of companies building mature platforms and trying to scale this up. So I think, I'm okay with the price kind of going all over the place for a while, but we build out the ecosystem and then we'll just be on a growth path. Look back at 2012, it was kind of a build year, 13 was a growth year, 14 was kind of a build year, 15 I think is going to be a growth year, both in adoption and in value.
There was an interesting article that was published maybe today or yesterday that basically took the market cap of all the Bitcoin VC invested companies and what the total value of all those companies were, and it's higher than the market cap of Bitcoin as a currency. So it's like people really are not valuing it based on what the current price is today, but what the future potential may hold. And could be a risky investment. It's not to say that everyone should be investing in Bitcoin because it is a very highly volatile asset. But for people like us that see the technology and see the potential implication 10, 20, 100 years down the future and what it means for society and global society, and we see that the risk now is worth taking, I think that's an amazing bet for us to take to build out these new technologies, because it's really one of these opportunities that you get once in a lifetime to build a revolutionary technology that's going to be able to help society in the future.
And I guess the other thing as well in terms of price, at the end of the day it comes down to money supply, right, and turnover. And even with the market cap of 3 billion in Bitcoin, just the trading volumes are magnitudes greater than that, let alone all the other turnover that's going on. So I think that if you look at how much Bitcoin is used, yes, the volatility in the price, can be challenging, but there are solutions for that as well to be able to use the rails. And we can, if Bitcoin was going to get to $1 trillion, I guess by today's amount of coins in our mind, it would be about 100,000. And when they're all mined, it would be about 50,000 a coin. But I don't think we need to get there to get that adoption and get that usage up. And so just about creating use cases. Don't explain TCP/IP. Do what you need to do. Have something that's a clear use case to whoever needs to use it, and use the rails, build it up, and I think the price will be fine. But the adoption curve is certainly growing.
Well, I think it's interesting when you talk about remittances as what you can do in the third world countries, or emerging countries rather, in better terms. And you think about worldwide adoption in places that actually need a currency like this, where it's not subject to inflation, governmental controls for politics. Wouldn't it have to also be seen as a worldwide currency asset class versus just being, overseas? So it does matter that it's a consumer currency.
Well, I don't know. There are certainly companies that are trying to build remittance services around, a Bitcoin as the rails model, where the end user is just going to some kiosk in Mexico and pulling out pesos, and likewise they're popping up at some similar, entity here to deliver it. So I think that it doesn't necessarily have to be, although the bigger question there is like, what about these places like Argentina or Venezuela, or God knows what's going to happen to Greece, where people are going to be thinking once again about the currency and their faith in it and whether or not they really want to be buying into that system. In those places, Bitcoin's a very real currency as something to hold and to think of as a store of value. I lived 6 years of my life in Argentina, and it's just not at all surprising to me that one of the most powerful use cases is Argentines using it in this kind of reverse way to actually take credit cards and turn them into Bitcoins. Because they've got to find their way around capital controls and things like that. So in certain places, absolutely, but I think it's going to be quite possible to send remittances in the background. I don't know if you guys would agree with that.
Yeah, absolutely agree. I think Bitcoin will be the backbone of the financial system, and not everybody has to touch Bitcoin. I mean, to John's point earlier about the psychological idea of owning one Bitcoin, there's 21 billion in perpetuity. So there's going to be, by that point, 8.5 billion people on the planet. So it's not a lot to go around. You can get down to bits and so on, but people are going to connect with brands, with endpoints, with financial institutions, with services, right? And then those services are going to be able to use Bitcoin as a much more cost-effective, much more reliable, greater consumer protection. All these things are going to come by using blockchain technology as opposed to archaic systems that get patch, and then we have JP Morgan Chase breach, a Home Depot breach, a Target breach. So I think what I'm seeing is that those kind of institutions, the large financial institutions, since we're here in New York, have moved from Bitcoin's nothing, don't bother me, that's a joke, to blockchain technology is meaningful, but we don't really like Bitcoin. And then we'll see what happens from here. I think if there is a change tip or another service that gets this viral effect, then Bitcoin, the currency, will become.
But change tip's a great example, right?
Yeah.
To a large extent, what you're doing is you don't even have to know that it's Bitcoin.
Fair. Yeah.
And you fund your wallet, they debit, they move between the accounts. But the ability for us to do is to say, hey, I'll buy your beer,
right,
and you have that, and it's available to you instantaneously. Right. And it's great that it's Bitcoin, and we like it, and I think it will create a lot of critical mass and adoption. But you don't have to know. People don't know that that's Bitcoin behind there.
Right. I think you talk about investing for 100 years or 200 years. I think it's kind of like we're all living in a town where it's dirt roads and we're riding horse and buggies, and we just saw the first horseless carriage drive by, right, and everyone is saying, "What is that?"
What's a wheel?
I really, and it's funny because Mike and I have been trying to come up with ways to explain this, and that's one thing that's popped into my head lately is I think this is it's analogous. It's not the exact same thing, but it's similar to the advent of the car, the horseless carriage, the internal combustion engine. When it first came out, a lot of people were confused about it. They thought it was dangerous. They tried to outlaw it. Really, it's all happened. Tried to outlaw it, ban it. They didn't think it would be safe. It was very difficult to use. You had to understand how the motor worked and all these things. Nobody could have foresaw 130 years ago that you would have cars, motorcycles, planes, motorboats, tanks, super tankers, paved highways, all these things that have come in the century after. Nobody could have foresaw that. But it all did happen. And look, I just wrote a book about it. I do think this is going to be. My point is, Mike and I, we're not like you guys, we're reporters, we're telling a story, but I really do think this is a compelling story, and I do think it's going to be a thing. And I do think that that's the point that we, I'll use it loosely, are at with Bitcoin. I think it's very, very, I think it's only 6 years old. It's very, very early days.
Do you consider it to be an accident of history, in the way that Bitcoin got to where it is? I mean, if you think about launching a coin today, right, it gets pre-mined really quickly, right? Or, the financial institutions would say, oh, I want to own that, right? Mm-hmm. And actually, I'll take your analogy a little further, the highways and the cars and everything. Well, the highways in the United States were paved because of World War II, right? Mm-hmm. To possibly land, aircrafts if needed during wartime. So Eisenhower had the line. So now we have a network of highways. Now we can actually take the next step in terms of commuting and traveling and everything else. So I kind of compare that to the capex spent on mining and the distribution of mining power. Right, $500 to $750 million put into the capex of a global mining network that now can't be manipulated by a government or an institution or anybody else. So that's, to
take an analogy further, though, with all the arguments about sort of concentrated mining and the concerns about, the problems of that. you could argue that they need kind of like the paved road equivalent for mining as well, right? In the sense that we need somehow to bring some order to this and sort of get away from the risk of a 51% attack, and whatever it is that people are worried about, because it does seem as if mining has become a sort of predominant concern for a lot of folks.
So, I mean, and I think that's a great point, Michael, because certainly a lot of the creation behind Bitcoin is sort of, we think, sort of the either libertarian or even anarchistic, influences of how we do it, and we don't need governments. And there's a lot of message, we'll circumvent governments, we're going to take down the banks. But think about why this institution exists, right? We all know nothing's perfect, there's a lot of innovation, we need big disruption in there and how we can improve that. But they're there for a reason, right? We didn't have banking infrastructure in the 1700s to the extent that we have today. They were because of things that we did, and people being people in the markets, and we needed to create some controls. And then there were some convenience factors. There are things that happen in that space, and I think as we get sort of more critical mass adoption, we get bigger companies being involved in this, and I think that we're going to get some stability. And I think it's a fine balance that we need to have, because we do like the decentralized, we do like the ability to have the control where we want it. But we also do need some stable forces in the ecosystem, people that can operate with the financial ecosystem, can operate with the regulators, make sure they understand and that they're comfortable with this. Because at the end of the day, if we all win, it's when mom and pop put Bitcoin in their 401k or in their kids' college fund. But they're not going to do that unless they trust it. And if everyone is out there having sort of more radicalized messages, then for the people that are going to make it critical adoption for them to achieve their goal, they're not going to do it, right? So we got to find a balance here.
So the tension you described, though, is really interesting, because it's like it's a fundamental element of technological progress through history. Is that the innovators are always the guys on the fringes.
So I have a question for everyone. What do you guys think about Bitcoin as sort of a maximalist view? I mean, we're all invested in blockchain technology, and we understand the value perception of Bitcoin, but what does it mean? Like, why do we think Bitcoin itself and not some alternative form, whether it's Ethereum or Vertcoin or Monero or some other kind of innovative technology that's based off of the same kind of peer-to-peer trustless blockchain technology? Why do we think Bitcoin itself is where we should be investing?
That's funny, because that's something that Mike and I go back and forth about a lot. It was really interesting writing this book, the two of us, because it really was a lot, not a lot, but a fair amount of Mike would feel one way, I'd feel the other. I think Bitcoin has a sort of critical mass that none of the other altcoins have, even Ripple or Ethereum, that they don't have yet. And part of that is the quirk of history. And part of that is, and I got really interested in this, in the whole sort of the cultural aspects of Bitcoin, and the fact that you had this entire counterculture movement grow up around a technology, around a currency that's very unusual. And the fact that people were they were making Bitcoin songs, and they were doing Bitcoin artwork. And that's
videos.
Bitcoin videos.
Here's my flag.
Right. That to me speaks of something very deeply seated in our society. And people responded to it, and it went viral. And I think that actually is a very big part of the Bitcoin story. And I think that gives Bitcoin a lot of life that these other altcoins don't have. The thing that's similar is, I'm sure you guys all know M-Pesa in Kenya. M-Pesa was born of a crisis. It was born of an election that was highly contested, and the nation sank into chaos. Nobody could send money around, and here was this thing that had just been started as an experiment. Suddenly people realized it had a value, and they jumped on it, and now M-Pesa is huge in Kenya. And I think Bitcoin was similar to that. So I think that's why Bitcoin has a momentum that other coins don't have. Even if they have some technological aspects that are superior, that's going to be a hard thing for Ethereum or Ripple, any of those guys to overcome. Doesn't mean they can't. And in the long run, I know, see Mike's already
I'm waiting sure I can
This is what we go back and forth on. But I think that's what Bitcoin has that these other coins don't have.
I think the best way to tell you, John,
there's definitely going to be competition from other blockchain technologies.
Yes.
That's going to come out there. Private, the US Fed starts their own blockchain. Each Fed bank has one. You have the same functionality and a lot of benefits. I think if Bitcoin continues to innovate, I mean, certainly on the transaction volumes, the daily transaction volumes you should be able to do in a second. Even doing things sort of like the microtransactions and other functionality that's going to be able to allow it to scale and maintain the competitive advantage. It's incredible what Bitcoin's got us today. The amount of mining power, certainly from a security and a ledger perspective, but that balance can also shift. But we got to be able to continue to innovate in the Bitcoin blockchain protocol if it's going to maintain its holding.
Yeah, I'm a pretty firm believer that Bitcoin is the chosen one, and it's, I've thought about this. I've gone back and forth, but I think I really have three reasons. The first is where we are in the distribution of mining power and the overall hash rate power. So you know, you guys can correct me if I'm wrong, but I think the overall hash power is like 10 times the cumulative all supercomputers in the world, right?
It's more than that.
Way more.
It's like 100 times Google's power.
Yeah,
it's you know.
No, it's actually, believe it or
10,000,
not,
is that the number?
13,000
Yeah.
times size of the 500 biggest supercomputers in the world. I mean, out of the totals, the 500 biggest supercomputers combined, it's 13,000 times stronger.
So that's incredible, right? So that is now something that can't be caught up to, right? And that distribution, while possibly we could say 51% attack risk and so on, I think the economic incentives are there and in place that the miners won't, you know, blow themselves up in a sense, right? You know, so that's number one. Number two is that I think I've come to think that a single money supply is important for cryptocurrency for our global use case. So I'm a big supporter of the Sidechains project because they use Bitcoin as a money supply and then do other things with Bitcoin rather than altcoins, which are saying money supply A, money supply B. I think that is not going to work. And then number three is just the investment capital and the companies being built in Bitcoin. You know, the amount of kind of wood behind this arrow of like, you know, BitGo, we're building security, right? And you know, others are building liquidity sources, and others are building derivative platforms now. And this is all about Bitcoin. And so I think the lead started, there was a wedge, then it got bigger, and now it's just kind of, it's gone. You know, Bitcoin is 13 miles down the marathon, and the other altcoins are 9.
So can I jump in and just I know that I'm going to be the alternative voice here. I'm actually on the fence, and I think that Sidechains question is actually the critical question. If Sidechains can pull off what they're trying to do, then Bitcoin's it, because they need to free up the kind of trap of innovation within, you know, the core software, and perhaps if they can find ways to just seep a lot of that innovative power to a sidechain project, and they can be allowed to do it, the miners still have to let them do it, then you've got something. But you've got this kind of circle of a problem around mining that these guys, you know, they've got a vested interest in the system that exists. And it may not be that the current mining model is a good one. You know, the competitive model, the build-up, we know the arms race, all of those problems. And the other thing I'll just say, and I hope that...
And I have a question with that one is, what happens when all of the Bitcoins have been mined? And then who owns all of the Bitcoins?
Oh, we'll all be dead.
Right? Then what?
Yeah. But I just think, I just want to say that this is because I hate to use my own call author here,
right,
foil, but you know, M-Pesa was truly born of the circumstances Paul described. But M-Pesa succeeded because Safaricom had a government monopoly, right? So Safaricom being the telecom provider that was right behind that. The thing that gets me about Bitcoin is, as much as it is the chosen one right now, and it's so much bigger than any other altcoin, if Walmart goes into bed with JP Morgan and they decide they get the imprimatur of the federal government to build some other separate coin, it doesn't matter. You can wipe out Bitcoin like that, right? I mean, it would...
Well, Bitcoin in the U.S. for 30% of the population. That's 100 million people versus 100 billion. I mean,
isn't it just a case of scale? I mean, isn't it just a case of saying, look, you know, at the moment, you know, the market cap is
look at the
big,
scale you just talked about, 13,000 times 500. I mean, look at the scale you
no, but that's in terms of mining power. Now, I mean, do we need that mining power?
Our U.S.-centric view is that we can control the internet, we can control Bitcoin. It's uncontrollable. It's a beast.
But I'm not saying it has to be a government plan thing. It could be. It could just. I'm just saying, if some other big player steps in, I would think that the barriers to entry that we think are so big now in the relative altcoin world suddenly don't look so big anymore. And maybe Ethereum suddenly just manages to pull off some great, or Ripple, you know, signs up enough big banks that they become the back end. I just think it's worth keeping on the table.
I think on that side, you know, as I said, I do believe there will be other blockchains with other asset classes of currencies and traditional currencies coming out. I mean, we're about 4 governments that are creating a digital currency right now. So that will happen. Hopefully, they will use the same standards. We'll have tools that are interchangeable. I think the scenario you said about Walmart teaming up with JP Morgan, I don't see that happening because, you know, you saw Walmart and CVS and a few others got together to try and create the competitor to Apple Pay. Big companies are really bad at innovating, right? And it's hard to get off the ground. And by the time they finally got through all their committees, you know, the technology is 10 years old and doesn't have the use case that goes on there. So some of those kind of world domination conspiracy theories, I think they're a lot harder to implement than we might give for.
True. The point is like, would one of these players endorse some other model? Would suddenly Ethereum get the stamp of approval from a big user level? It doesn't have to do they build their own coin. I think those are the sorts of scenarios.
I mean, that's the thing though, is do we need another currency or do we need another chain? And I reviewed one the other day today, a paper about a new coin, and I'm like, why are you trying to create a new currency? I guess it's a token, but you could peg that token to some other value in terms of the exchange and what that is. But it's a token used for paying the tolls in that network, right? And you can think of sort of purely as the payments process, or autonomous networks of machines talking to each other, needing to pay each other and settle the balances. You don't need to create a new token to have the functionality of that distribution. And so I think as we're coming up with new applications that kind of adopt that model, then Bitcoin will still be there, will still be the price.
I'm kind of the same mindset as you, that there could actually be a disruptor to Bitcoin, and we're working with clientele that have privately launched very, very large coin networks, across the world. And we talk about Bitcoin as a marathon, and we're already, they're already 15 miles ahead of everyone else. But this marathon turns out to be 1,000 miles long, and we're just at the beginning of the race, right? And so, for me, going back to the biggest part about Bitcoin and the barriers to adoption is the price volatility. That price volatility really stems from not just manipulators in the market, but also from the distribution mechanism of mining itself. And I love what you do. I just disagree with your opinion on, one, you said Bitcoin mining offers the correct incentives for people to continue mining for security. Maybe when Bitcoin was at $1,000 and there was a lot of speculation in the market, at this point, almost every single miner is below their actual cost of mining, and so mining farms are all shutting down. All the cloud-based miners are shutting down. And you have the big centralized farms in China and Russia and Thailand. You have some guys that are maybe burning their farms down, claiming insurance because they're like, what do we do at this point? I mean, or subsidized electricity. I mean, that's the only way to continue this. And you start to think, is this the end goal? Like, how, as a consensus algorithm for proof of work mining, if proof of work mining was the end goal, then yes, I completely agree with you. Then Bitcoin has by far the greatest advantage of anyone else because of the current amount of SHA hashing power that's globally available. But I disagree that proof of work mining is the end all of consensus algorithms, and I believe we'll come up with better ones, or maybe some already exist. And as we start to test those and make them more robust and see how we can adopt those, I believe that Bitcoin itself will probably have to fork and adopt one of these less,
but a fork would be okay, right? I mean, end up with some. It seems like the best of both worlds would be Bitcoin retains the brand, if that's what it seems like it's important for the community, and ultimately its value, but somehow ends up being proved under a kind of a less competitive environment, proof of stake or something else. Would that be? I mean, this is just my ignorance here, but could it be physically possible to shift the consensus algorithm?
Absolutely.
Keep the same coin.
You can do it. You can do it overnight. I mean, there's already been.
It would still be Bitcoin. It wouldn't.
There's already been forks. You can keep the same blockchain, same distribution that you've had, and just agree to a fork. We can agree to a fork.
See, that's
at the end of next month, everyone's going to switch to proof of stake. The problem is there's so much money that's been invested in proof of work mining. Those guys have a lot of the vote on the coin. They might just say, you know what, forget it. We're not going to go with your proof of stake network. We're going to go with proof of work because we've already invested in the mining farm. We're going to keep our own farm, and then you start to have divergence in the Bitcoin network. We're already having a lot of debates around this. If you go into Bitcoin Wizard or whatever, they're talking about these things on IRC. There's a proposal for increasing the block size, right, in Bitcoin. How is that going to potentially affect forks? There's Conformal released a blog article recently to talk about all the different wallet implementations and what that means for potentially forking the network and the kind of negative implications that would have. I mean, there's a lot of technical discussion around these consensus algorithms for forking the network and what that means for Bitcoin as a coin. We're still in its infancy. I'm not saying that I want Bitcoin to go away. In fact, I have Bitcoins, right? I do invest in some a little bit, even though it's a risky asset because I try to use them. I try to learn about the technology. But I'm aware that there could be alternatives that are out there. And I think we're all actively working to get to that point where this technology is something we can offer to consumers in a friendly way, either consumers or businesses, and say that, you know, this is finally something that works, it's robust, it's tested, and we know over a long period of time that it's going to be sustainable. And I don't think we've quite gotten to that point, but we're getting there pretty quickly with all the money that's moving into the space. So.
Well, there's developments of Sidechains, and I also know a bunch of folks looking at blockchain as a new blockchain to fork into, actually. Some really brilliant minds and technologies. So
I mean, I love the open asset stuff, all the Bitcoin 2.0 type of things that are happening. You know, Color Fork, you know, Counterparty, you know, BitShares, like all these things, Mastercoin. I mean, really, really cool stuff that's happening. And you know, I'll be like, I don't think we can even imagine what Bitcoin will be like. Forget 10 years down the road. Next year alone, it's going to be completely different from what we're seeing. So. Well,
actually, Brad, I think you're bringing a lot of perspective from where you do most of your business, which is China. So maybe you can give us a new perspective in what's going on over there.
We have some large clients in China that you know, are launching, you know, their own internal coin networks that we're building for them, and it's very interesting. Actually, China. If we don't want to go into the Chinese, you know, versus America discussion, in China, the general consensus there in terms of Bitcoin isn't that this is a revolutionary technology that's going to change the world. The general consensus in China is that this is a really cool, volatile, tradable asset that we can use to make money very quickly. And you know, in the U.S., it's completely different. In the U.S., it's wow, this is a technology that retailers can use. We can just start payment systems. We can take out, you know, we can undercut all of these payment processor fees. We can do trustless, you know, remittances. This is really cool, let's invest in it, right? And so there's two completely different mindsets. The problem is that now the Chinese economy has been growing so fast and there's so much money there that their opinion about trading and, you know, all these futures exchanges now have opened in China, and you have very rampant price manipulation in the markets. And you get 50x leverage at some of these exchanges. You can put, you know, you can easily manipulate a market that's not very liquid today. And people are making a killing off of that kind of stuff. And having that happen in China is not really positive for adoption. So people are really looking for, like, I go back to my point about price stability. If we can offer a price stable coin that offers the same kind of transmission, trustless peer-to-peer technology, that's going to be really the killer app. I mean, one of our clients created a coin for them called EGD. They even have a publicly listed entity in the US that they've acquired, and they're launching, we're doing huge projects for them. But this is all sort of under the radar. We don't even want to be on CoinMarketCap or Bitcoin Talk or Reddit, you know, and I'm a Reddit moderator for Bitcoin. You know, I love Reddit, but there are so many trolls there that they don't really understand everything that's happening, that you don't want to expose like an infant technology that has a lot of potential to, you know, all these naysayers, you know, in the early stages, because you'll just kill it.
You know, that issue about market manipulation, and I know we all think that it's about much more than the price, but I think the price does matter. Those tools are not going to go away. Those trading options are not going to go away. How do you collar them? How do you keep them stable so that you do have a stable price?
Dilute them.
What?
Dilute them.
How? Do it. I mean,
more natural use cases.
Yeah, more natural use cases. Absolutely. You need real volume. I mean, it's happening. I mean, Milton Global's doing it. The second market, Barry Silbert's launching his exchange. I mean, there's institutional exchanges happening, you know, with their nice investment into Coinbase. You're going to have real price, you know.
Will people be investing in Barry's ETF if they see the price or ping-ponging and going crazy?
Well, you see that the announcement for, well, there was a tweet by George from Bitfury last night about, I think the Winklevoss ETF launching in NASDAQ in the next 4 weeks. So, yeah, there's going to be more holds. I mean, how much? I think, yes, it is good because there's a lot of people that currently can't invest in Bitcoin can legally invest once it's on the stock market. So I think that you can have your 401k and a bunch of other benefits. So yes, that will create adoption. But that's only sort of part of the story, right? We don't just people to sit and hold on Bitcoin because everybody has it, just sits and holds it. It doesn't have any value. You know, as I said, there's turnover, there's payments remittance case, the case that you said. Someone puts dollars in the ATM in New York, goes Bitcoin to Mexico, and pesos came out the other side. You do that, you know, and you get that kind of turnover going. You know, that's trillions of dollars worth of flow that's going through there. I mean, those kinds of things and that kind of volume, stable flow, stable use cases, and work on the whole internet things and sort of these devices paying for themselves in their ways and the tolls that they're using that's in there, and getting those transaction volumes just going up that's in there. It's create a natural supply and demand.
When you're really going to see the price going up for Bitcoin in the future is when people, like, we have all this remittance infrastructure that's put in place, Circle's doing it, Coinbase is trying to do it, and all these exchanges around the world trying to do remittance, right? And that's a huge market to break into. But once you stop saying, oh, we're going to remit dollars and get like South African rand, or remit this and get Indian rupees, but we're just going to send Bitcoins and they're going to hold it and use it in their own, in their own day-to-day lives or investments, whatever it is, and not convert it back into the fiat currency, that's when you're going to see real price appreciation, and it's going to take off. And that's a step that's, again, we got to do all these intermediate steps to get to that point. But that's what.
But would there also be value appreciation just if it's being used for that intermediary purpose, right?
It doesn't matter what the value is if it's just a transaction.
Right, but you've got people who are, on the one hand, to John's point, who are investing in it as a store of value, who are buying. On the other hand, you've also got these remittance companies who are just using it as their intermediary. One would think that
there would be a marginally positive
demand,
more demand,
yeah,
that would potentially increase the price. And the problem that we still have is we're still going through a very high inflation period for Bitcoin. I mean, was it 10% annual or something like that, where the coins that are being created means that the value should technically be going down every single day, right? Well, by a little bit, not the kind of magnitude of swings that we're seeing, but there's still this period of coin distribution and inflation that's happening that is not as pronounced in Bitcoin as it is in some other altcoins that are using that same type of distribution model, but it's still there.
Goes to 12.5 coins the end of next year, right?
But one of my colleagues wrote a paper at the hedge fund she worked at before joining Noble, and it was about the profitability of miners if there was no reward for mining, and just other than the transaction volumes. And I said that if Bitcoin is able to live up to our vision of it becoming the rails, even if they're making fractions of what Amex and MasterCard, let alone the other payments networks are charging, it's a very profitable industry.
Because of the volume.
Just the volume,
transactions, yeah.
Well, I don't know how you can say profitable. I mean, I think that because if it is profitable, you're going to have more people moving into that industry, and you're always going to get really close to break even, if anything. Yeah, because you're just going to have more entrepreneurs that buy miners and say, this is a profitable industry, we're going to get into it, we're going to start mining, and you get to the point where...
But the barriers to entry are high, and they're going to continue to get higher, which is going to be harder for people to start. It's like, I'm not just going to start another national airline today, right? Because there's hundreds of millions of dollars that you're going to spend to be able to do this.
I don't know, I can't afford it.
You've thought about it, John. Come on. Who can understand?
Starting Bitcoin.
Noble Airline.
First Bitcoin airline. Yeah, so there's certainly barriers to entry, and that's why some of the larger mining players, and that's what they're doing. They're shoring up their position. They raise capital. They're able to keep capital, so they knew that this was coming, that they had a balance sheet to see them through this, and kind of make sure that they're protecting their share. I think the other thing they've seen that is they've been responsible to not be too big, but sort of maintain their share.
Well, I think this is all a discussion to be continued further. I'm sure we're going to probably revisit maybe even every quarter and it'll be the same. We don't know what's happening, but hopefully everyone gets on the same page eventually. So thank you guys all for coming out from the cold in New York to meet us over here and for your time.
Thank you.
Next time I'm just going to disagree with everything Michael says.
How can you think it's always a good option?
I've made a decent career out of
It didn't work. You know what the face.
It's always better to have someone uncomfortable in the middle of an argument.
No, but a healthy debate's always good.
Oh, yeah.
Definitely. Great, and congratulations. Good luck on the vote.
Thank you very much.
Bye, guys.